Welcome to this week's episode of Your Stock Request for the 15th of February. Every week I'll look at the charts for a few different stocks as requested by you. Just email us at mail@fairmontequities.com. There's a limit of one per person and no guarantee that your stock will be covered. Also, just make sure you share this video on social media to ensure we get a lot more requests, and then I can filter down to the best ones and present them for you. Also, just take note of our disclaimer. Any advice is general only. First one today is Stockland SGP. This is a daily chart. I'll move out to a monthly. So just going back the last, say, 6 years, we can see that it's clearly had a good run, like most property trusts, and then it started to have a bit of a pullback. So what I've noticed is over the last few years seems to have been forming this symmetrical triangle. Zoom back in, and clearly earlier this year it broke to the downside. Obviously everyone's talking about bond rates at the moment, which is a negative for the sector. I'd be expecting more downside back towards the start of this triangle. So we're looking at about $3.80 for some support, and then potentially a bounce back up. Why would that be? Well, maybe the market's a little bit too scared about rising rates, and the stocks may be a bit oversold when it gets down here. If it does bounce, what we'll need to look for is how it behaves at this line here. So what used to be support should then become resistance. And I think if we see Stockland come back up here but really struggle against this line, we could see further downside in the share price. The next one we have is Hotel Property, HPI. Now this one looking a bit vulnerable. So we had a good run over last year, and then on this weekly chart we can clearly see a lot of price rejection. So obviously anywhere near $3.40. So we're going for 1, 2, 3, 4, 5. So essentially for about 6 weeks it tested that, and clearly when it couldn't go through, some of the smart money hit the sell button and off she went. So not looking too good at the moment, although at a glance it looks like it's near the uptrend line. So it looks like it broke that this week, and so far we could see a bit of a rally back up. I'll just move to a daily chart. So we'll have to see what event was here that caused it to drop. Maybe a bad result. Similar to Stockland, see how it behaves. If it could quickly get above this line, I think all is good for the share price. If it struggles at this diagonal line, then we're going to look for probably levels back here towards 260. FMG, yes, I am still positive on it. So we put a buyout on it around here. So when it successfully here in December retested the June low and bounced on volume, I got quite positive for FMG. We could see it had a good run up to about 540, started easing back, a fairly corrective pullback, so it didn't concern me too much. But what gets me a little bit more positive on the stock is the way it's behaved in the last couple of weeks. So this is a daily chart. Just zoom in a bit more. So around here was when the share market started to get sold off, and you could see that Fortescue really held in there quite nicely. I mean, this is a sort of stock that you'd expect to be falling, 5, 6, 7% a day when everything's negative, but it held in there and it's managed to start to recover. So very much a positive sign. So this sort of correction here looks like it's over and the stock wants to rally. So I'm still looking at levels back to $5.50 and then possibly $6 over the next few months. Green Cross, GXL. I'm a bit neutral on this one. We did have a note around this point here last year stating that it might stage a bit of a bounce, but it's now hitting some clear resistance. And obviously, just looking at the chart, all this choppy price action from the last couple of years is where it's now turning around at. So obviously finding a bit of resistance, pulling back, managed to recover off the lows last week, but so far this week it's started to struggle again. So again, I'd like to see it have another crack and get through this sort of level back to a weekly chart. Otherwise, if it can't, we might just see it drift back towards that 550 level. Rio, quite surprised at the strength of this one. A few months ago, sort of towards the end of last year, I put a note out with an eventual $90 target on Rio. So just zooming out, still on a weekly chart, going back the last 10 years. So firstly, we've had this corrective pullback, which was broken towards the end of 2016. Then we could see with these points here, there was some obvious resistance near $70, and it managed to push through that, sort of tested it and pushed up again at the end of last year. So I think this was when I was putting my note out, just saying, look, this is pretty bullish price action, and saw a great rally in Rio. I'll just switch to a daily chart. We had some clients trade this, got out around that sort of $80 level. It's pulled back, but not enough, I guess, for some. It's managed to really hang in there, and now it's starting to move higher again. One thing I noticed is this previous high and this low. So the low is sitting on top of this high, which is a positive sign. And I guess we've had a bit of a correction here, which might just be ending at the moment, similar to Fortescue. So I'll just move back to the weekly chart, get rid of that. So we can see it building quite nicely, sitting on top of that. Should head higher from here. So last few days has been very encouraging for Rio, and I'd say that it looks like it's pretty much a buying opportunity again, the way it's been trading. So the previous peak there was near $90. That's what I'm looking at as the next target. Where are we? About nearly 79. So a bit of upside there for a potential trade. Next stock is Praemium. So this is one that everyone jumped on the bandwagon at the end of last year, and it's done really well. Obviously, it's come back quite a bit in the last few weeks. So not just the sell-off from the overall market, but it looked like it was pulling back anyway. I'll zoom in a bit more on the weekly chart. So essentially we've had this previous high here that the shares seem to be finding support at. So at the moment there's buying coming in every time it dips into the low 60s. So I'd say it could head higher. Of course, I look at the timing of the moves in that we've had a bit of a pullback here that's been fairly steep. So I don't think that the consolidation of this, when we're looking at this move here, it probably needs to consolidate that move. I don't think the consolidation is necessarily over with this sharp move. We might see a move up, there may be another one coming down, or just maybe see the stock use up a bit more time. Finally, Domino's. I think for our paying clients, head and shoulders here, where we got negative on the stock, and it's just been sort of failing ever since. Started to look a bit interesting here, but until this thing makes a higher high, I can't be buying it. In other words, see here's a high, a lower high, basically lower highs, another lower high. Here it almost looked like it was going to take out this high, and then of course this week it failed. So at the moment it looks like it'll go under this low. What would change my mind is, of course, if it takes out this level here. Some of you familiar with charting patterns might view this as a possible cup and handle, could be. I just don't know that until it pushes through and closes above $50. So it may well be a trade again. I'd want to see it push through 50. Otherwise, I think it's at risk of potentially making a new low. Okay, well, that's it for today. Remember, send in your requests for next week. And as I said at the beginning, do the right thing. Share this video on social media.